we have to reverse back to say, do they really care about international investors? Do they really care about the stock market? I mean, let's ask that dangerous question, because the thing is that coming from the West, particularly the US, where the stock market is so tied up with consumer confidence, it's so tied up with the concept of wealth effect, it is one of the many focuses, the prime focuses of the Federal Reserve and the whole of the sort of system, if you like. In China, companies don't need capital they're getting their capital from cash flows. They're getting their capital, from the sort of the private side. So the stock market doesn't provide the same sort of service in China that it does. Now, it will do. I think the key here is it will do.
The people. For political stability, you need the people to think that they can be aspirational and to be able to increase their net worth and then to consume if you're trying to shift into a consumer-driven economy. You need there to be an acceleration of equity markets. You need property values to increase. It doesn't have to be exponential and, up and to the right. But don't you need that to happen? And that international investment helps that along.
Well, I think this is the central dilemma, is that the West basically has spent years assuming that China was just another emerging market, and it was going to do exactly the same, and it was going to drive everything with lots of borrowing and lots of leverage, and the sort of the Wall Street and the, if you like, the Washington consensus. What Xi told us 2 years ago was that's not what they're going to do. They're not going to privatise and create a whole lot of monopolies, which will allow massive rent extraction and very attractive profitability for corporates that we can all invest in. They don't see that as the role of the stock market or the state. The state is there to provide, as it said, common prosperity. And we have to accept that there are private companies that will make private profits that we can invest in, and we need to focus on those, and that the consumer should not be going out and leveraging themselves up 10 times over in order to drive some sort of headline GDP growth. That's not what they're focusing on. I think we need to look at the thing about China. They tell us what they're going to do. They told us 2 years ago that they were going to deflate the bubble in the housing market, not in the market, but in the developers. But we kept on buying the stocks in the developers. We kept on buying their overseas debt, and then we turned around and said, how's China done this to us? It needs to support this sector. And we know it works in the West. The politicians say, OK, yeah, we'll put lots of public money in to bail out the follies of the private investor. But in China, they basically said, well, we told you this was going to go. You're down 95%, sorry, but it's not that we're doing it deliberately against you, but we were just, we told you what our priorities are. So I think there is value in China, but I think we have to understand that they're not following our script. And I think that's where we've been missing, I think. And their growth is coming from other places. And they're going to grow their financial sector as a pension and a saving system, not a speculation and effectively selling it off to overseas investors like other emerging markets have been forced to do system.